Yam, bills, Bitcoin. Let's begin. Jamaican dollar is a fiat currency, meaning it is backed by the government and their trust in it. It has no real value, only attributed value. The reason why you have no problem giving nice yam away for paper is because you know tasties down the road will always accept it for beef patty, but the paper itself is worthless. Cryptocurrency, however, is a digital asset that derives its value from its native blockchain, which is supposed to do something. For example, Stellar is designed to allow businesses to carry out very large transactions that would normally take days in seconds. BNB is a utility cryptocurrency for the Binance exchange. VeChain is used to track quantities of goods. Ethereum is programmable money, etc., etc. Much like how gold has value beyond being shiny, each cryptocurrency gains its value from its use case and also the general properties that come with cryptocurrency, such as not being able to be counterfeited or that it's decentralized. Banks also are just bad. They charge you to deposit, charge you to withdraw, charge you to transfer, can deny you purchase if they don't like it, long lines, etc., etc. Banks also create money when people borrow money, and we borrow a lot of money. So we need to print more and more money, and that has a small side effect called inflation, which directly decreases the Jamaican dollar purchasing power, causing the price of goods and services to rapidly increase. All this to say you are losing money just by holding the Jamaican dollar, and it's a lot of money you're losing. 5 years ago, 1 USD was 125 GMD. Now 1 USD is 155 GMD. Some quick math tells us that the GMD has lost about 20% of its value since then. Not to mention things expensive here. Irrespective of that, the dollar is losing its worth while the price of goods are increasing. Just look at this receipt from 2019. A big deal now costs over $1,000, meaning you now need more money to buy less chicken. The price of one Bitcoin today is 7.7 million Jamaican dollars. But 5 years ago, it was just 113 Jamaican dollars. If you had 1,000 Jamaican dollar worth of Bitcoin, it would be worth 68,000 Jamaican dollars today. This is because Bitcoin is deflationary, among other things. And there are thousands of more cryptocurrencies in the space doing just as interesting and more lucrative projects. So how can you make money? The simplest, least risky way to earn in crypto is to hodl. And all hodling is holding. And that's it. And this of course comes with having a good entry strategy. And a good one to use is dollar cost averaging, which basically means at the end of the month, you put a portion of your salary into crypto because buying in gently and not all at once drastically decreases risk. While hodl investing is to make money in the long term, trading is meant to exploit short-term opportunities. Remember, the crypto market is volatile. This means the prices of assets can increase and decrease in price dramatically over the short term. To be a successful trader, you need to have the proper analytical and technical skills. Rule number 1, buy low, sell high. How to know when an asset is low or high? You will need to do some research. But there are many people like this African brother on YouTube that can teach you how to read charts and use tools to know how to properly trade. But no, it's more than just chart analysis. Upcoming real world and unpredictable events affect the market, both negatively and positively. Imagine you have yam and this man comes to you and say, if you put yam in this pool, I will give you back your yam and I will give you more yam. This man is a crypto network, and the more yam you have, the better the yam network will run. And the network rewards you back with more yam. And you can earn some high rewards. You can stake ETH, ADA, Cake, and a lot more. And the rewards are usually quoted in APY. For example, on PancakeSwap, you can stake Cake for 67% APY, which means if you stake $1,000, they will reward you $670 in Cake over the course of 1 year, depending on the price of Cake and the APY at the time. Yield farming is similar to staking, but a bit more complex. One way to farm is by providing liquidity to a decentralized exchange. For example, let's say Jamaica had an online exchange where you could exchange yam for banana and vice versa, called Yam. You could provide liquidity by placing $1,000 worth of yam and $1,000 worth of banana into a yam banana liquidity pool on Yam. Every time someone swaps banana for yam in this pool, Yam charges them a small fee for the transaction. And at the end of the day, Yam will give you some percentage of the money they made, plus you can take back your yam and banana anytime or add more or whatever you want to do. There's some risk to be understood, but no, this is an easy way to earn some passive income. Depositing your crypto into an interest account app such as Celsius or BlockFi is another way of making more passive income. These are cryptocurrency lending and borrowing platforms where investors can earn interest on your crypto holdings. In the case of Celsius, they'll pay you weekly every Monday morning. Now I'm going to briefly discuss mining. Mining is just reaping the yam, but you have to solve some complicated puzzle first. But instead of you solving it, is a computer. But these puzzles are very hard and require a lot of power. And in time, that equates to a lot of energy, which is JPS. Mining is not profitable because our electricity rates are incredibly high, one of the highest in the world. If you're not going to invest in crypto, at least invest in solar. Anyway, this video is getting long and I still haven't talked about NFTs. But to be honest, I don't know everything. The crypto space is vast and you have to get in the habit of doing your own research. But I believe in you. The more foreign money we can pump into our economy, the more money we will have to build our infrastructure, or pay our teachers, or grow yam. Also, we can't be late to the party again. The profits will be gone by the time we catch on. Inform yourself and take care.
But you know, I think about this, and what about this internet thing? Do you know anything about that?
Sure.
What the hell is that exactly?
It is the big new thing.
Yeah, but you know, it's easy to criticize something you don't fully understand, which is my position here.
Go ahead.
But I can remember a couple of months ago, there was like a big breakthrough announcement that on the internet or on some computer deal, they were going to broadcast a baseball game. You could listen to a baseball